Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Alex Konoplyasty on the line, and he is the founder of Flashpoint Capital, and this interview is part of our iConnections Miami series, where we bring you the best of those that attended and participated in iConnections, which took place in Miami. Alex, welcome to the show.
Yes, Adam, it's a great pleasure. Thanks for having me. Nice to talk to you.
All right. So great to have you on. And I like our conversation today. So we're going to talk about venture growth, balancing early risk with scalable upside. So what that looks like, and also a couple other things, what we're going to work into the conversation. But just to get us started here, Flashpoint Capital, maybe start with, let's go back in time a little bit. Alex, how'd you get into finance and how'd you get into this business originally?
No, yes, Adam, with pleasure. So, I'm a former Morgan Stanley banker. I am Ukrainian by origin, started my career in London, initially focusing on telecom, media, and technology at the investment bank, running IPOs, M&As, restructurings, mostly across Europe, Northern Africa, some emerging markets. And then about 15 years ago, together with my partners, we started investing own money into earlier stage companies, so smaller companies, I would say, without any particular plan. But then what I realized is that some of these companies that are growing and scaling and getting into revenues, when their products are reaching product market fit, and they're missing some value add advice from their existing investors and people who have seen companies grow to a large scale. So that's where I saw a niche for us to start playing that. Today, Flashpoint manages about $600 million assets under management, having started with our own money initially. So we've gone a long way. Yeah, that's our story. And then the other thing to mention, that having started out of Europe, we really have been moving into the US market because our focus is US companies that are focusing on the US market, generating revenues in dollars. Mm-hmm. But because we come across the pond, our focus is to support founders originating out of Europe and sort of Middle Eastern region, but working in the US. That's why we have an office in New York, an office in London, trying to support these founders as they migrate and relocate into North America.
I definitely want to go further into your model, and especially where you think that additional value add can be. But before we get into that, I'm curious about iConnections. I know that you were at the recent Miami event. Like, tell me maybe a little bit more about tell me a little bit about your experience there. Is this the first time attending? Have you been in the past? Like, give me some of the backstory there.
Absolutely. No, it was my first time, and I was honestly. Yeah, exactly.
And my first time too, Alex, by the way. My first time too.
Okay.
I'll tell you, I've been hearing about this iConnections for a long time, and people are like, Adam, you gotta go. But people always tell me that. So I have to hear it. I have to hear it a bunch of times before I actually go.
Before you decide.
But I was pleasantly surprised. How about you?
It was not cheap, I must admit, right? Compared to like a lot of other conferences we've participated, but besides Miami and the overall ambience, great weather and stuff, I think that the conference itself was a blast, to be honest. It exceeded all expectations with a smooth organization, just bringing so many people together under one roof. The quality of the panels, because there was a day when there were some presentations made, quite insightful. And then the quality of organization in terms of matching GPs like ourselves with some investors who are looking to get acquainted and start, a relationship. And then finishing with some, off-site events and side events, which were plenty, sometimes, too much of side event party. But yeah, no, it was a great time. Definitely looking forward to continue our experience and, joining some more of the iConnections events in the future.
Yeah, I agree with that. I was like, I went once and I'm like, oh yeah, I knew pretty quickly. I'm like, okay, I'll be coming to these often. Great. Now I have to travel more. No, poor me, right, Alex? Poor me. I have to go to Miami.
Well, Miami is not such a bad place. Yeah.
Oh man, that's good. All right. Okay. Circling back to the financial side of things right now. So let's get back to your model. Now you did mention, and you said, so sometimes especially when you were creating Flashpoint Capital, that there was maybe some other opportunity to add additional value, maybe in later stage or otherwise. What did you mean by that? Like, let's go a little bit further into that and what the model looks like.
Yeah, so our business model, thanks Adam for asking. So our business model is essentially, if you think about company building and company creation, there are several distinct, stages of that process. So initially there is the founder is developing a product and trying to find a fit with its first customers, trying to see, okay, who is the ideal customer profile and can you find the right channels to start selling this product to the customers. That's where the seed investors or early investors are usually coming in, right? When there is a person, they know this person, they like the product, or they're familiar with the sector. So for them, validation by the market, validation by the numbers is less important. So that's like initial stage of company creation.
Mm-hmm.
Then on the other side, when company is already advanced and yet, advanced and gets to tens of millions of dollars, where it has proven its leadership, it has multiple channels, it has a product that evolved, and they built more product on top of it, multiple products maybe under one hood, then it becomes easier for growth investors or later stage investors to come in because then they provide capital to scale what company is already good at doing, right?
Mm-hmm.
So we, as Flashpoint, we come sort of in between. We come between the stage where the company has proven product market fit and you can measure it with the data, right? Going deeper inside and trying to understand if the product is really working, is really tracking. And that's something sometimes early investors are not capable to see because they're understaffed. There's usually like one-man show. They're not like diving deeper into the numbers maybe. But it's too early for the growth guys. So we start coming in at the stage when the companies are tracking towards like, $2 to $10 million of revenue per year, where liquidity is still scarce, right? If you look at the volume of deal flow, most of capital gets allocated to companies that are like 30, 50, $100 million. That's where most of the money is flowing. So these early stages, capital is scarce. Founders are struggling to raise capital, especially, founders like we are targeting that are relocating into the US market and who are harder to verify by US investors, right? So if you come out of like Romania, Poland, Israel, some of these Czech Republic markets, and if you have only 3 million of revenue, you speak English with the accent, you haven't graduated from a local US university, you haven't had a job in the US market, it's very hard for US investors to put to have a lot of credibility in you. So they would wait to see you how you track. And that's where Flashpoint comes in, right at this point. And then the other element of our business model is that normally we would start with a smaller check. So we like companies that are, lean, that are trying to be efficient, that are not overburning capital, because a lot of times investors flood companies with cash, which sits on their balance sheets and on their bank accounts, but it doesn't get spent very quickly, right? Companies like having buffers, founders like having buffers. I mean, it's great to have a lot of liquidity, a lot of capital, a lot of cushion, but then that makes you sometimes less focused, more lazy, less efficient. So we're trying to be nimble and but then we allocate more capital. So we like building the relationship with the founder and giving him money or her later on as we grow into the numbers, and support this company as it evolves. So that's essentially how we see ourselves. And then the latter part of our capital gets already invested closer to the 10 to 20 million. So at the earlier growth stages for the company, comparable to some of the growth investors. So we act like it's a bridge between the early investors and growth investors. And that also proves in the numbers. So we've done in general about 65 investments. We've done about 25 exits. We do have a number of very large US investors like SoftBank, KKR, Apex, PSG, who came into our companies, Tiger. We sold companies to General Atlantic, Apple, etc. So there is a lot of this traction that we've been able to see with the companies that we've supported early on.
Yeah. And so it seems like, you've kind of found this sweet spot for these really specific companies that are in need of capital, but haven't quite hit that larger stage yet. Is that right? Summing it up?
If you look at examples of companies that we sold, like chef.com, right? Or which got sold, which has become a huge success and the team has achieved a lot, or like Guesty from Israel that got funding from Apex, KKR, Michael Dell, Sixth Street down the road, or a company that we recently, AI company called Mice, that we just sold to SoftBank. So that really sums up our track record and our traction.
Switching here slightly, what is the efficiency edge in venture growth? What does that look like?
Yeah, so we're looking for companies. I think with AI now, a lot is changing and evolving. But originally, we were looking for companies the reason why we're focusing on like founders out of Europe, out of the region, is that the cost of development at the stage when you have like 3, 5, 10 million of revenue, the
Mm,
R&D cost as percent of your revenue is dramatic, right? It's huge. You're
mm,
investing more into product than in your sales and marketing. As you grow over time, as you get to like 20, 30, $50 million of revenue, you don't invest as much into R&D, but you ramp up your sales and marketing costs.
yeah.
Also, like in the US, the sales and marketing is more expensive. So for us, these initial stages, the R&D becomes like the key focus area. And if you have developers that are basically in a cheaper geography, and that's how
Hmm.
we started, that's where we sort of spotted this arbitrage opportunity. If you have developers like in Eastern Europe, you can spend a fraction of what you would spend on a developer in like Silicon Valley or Boston,
Hmm.
Massachusetts. And they would have exactly the same US dollar revenues, right? So you have much more efficient companies that are where the founders are thoughtful about the cost, the margin. Now with AI, of course, this is evolving even further because now you see companies that have tens of millions of dollars of revenue with a fraction of people, right? So AI
Hmm.
is enabling people to become even more efficient. I'm waiting for a unicorn AI company with just one employee, right?
Yeah,
I think that will be
it's happening.
yeah, it's happening exactly. So that's the efficiency edge that we're like seeking for. We're seeking for companies that are thinking about their, long-term sustainability margins that are less focused on like, burn and
Hmm.
more focused about unit economics and metrics earlier on, because then it allows for efficient growth. And we've seen it in the last, 3, 4, 5 years, especially with the bigger companies in our portfolio. We have a number of companies that have grown into unicorn status and, several hundred
Hmm.
millions of revenues. The investors are more focusing now on like various rules of 40, 60, 100 and profitability metrics. So this has become a lot more important. But for us, it was always like, an area of focus.
Man, Alex, what a great story. I love it. And I see what you're
Thank
talking.
you.
I kind of figured that part of the initial model was like, well, yeah, if development's going to be less expensive in Eastern Europe and other things, then there's going to be, an edge and a certain efficiency there. But then also, when you think about how fast AI is moving, and I'm waiting for you, by the way, on that single founder, like unicorn, like I'm waiting for that too. It's going to happen. We're all going to hear about it
Gonna
as soon as it
happen.
does. Well,
Exactly.
this has been great having you on the show today, getting to know more about Flashpoint Capital. Appreciate you coming on, Alex. And if somebody wants to
Adam, thank
follow,
you.
absolutely. And if somebody wants to follow up, learn more, and follow your work, how do they do that?
Yeah, so you can visit our website at flashpoint.capital or find us on LinkedIn or, find myself personally, Alex Konoplyasty. I think LinkedIn these days is the best way to connect. I would love to connect, tell more, and if we can be finding more good companies together, would love to.
Wonderful. For everybody listening, just so you know, we'll definitely put some links in the show notes so that you can connect with Alex on LinkedIn, of course, and then also check out the website, Flashpoint Capital. Speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Yes, you heard me correct. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way on your journey as well. So hit that subscribe or follow button. And Alex, man, appreciate you coming on. Thanks so much.
Thank you, Adam. Thank you. Have a good day. Bye bye.